Good morning, everyone, and welcome to the European crossover webinar. And we do have some Eurozone current account data coming in, just waiting for that print. Current account says it came in at 20 billion, previous was 16.59. So yeah, we just came in right here. And we don't have any data until US session at 8:30 Eastern, which will be building permits and housing starts. And that'll be it for the day. Building permits and housing starts. And take a look at the euro. It's just a tad bit stronger. So, yesterday I reiterated that I don't think the dollar could rally if you shot it out of a cannon. You know what I mean? So, despite the sell-off we saw in equity yesterday, you didn't even get a whisper of a rally in the dollar index. But I've been down on the dollar for nearly 6 weeks. And it doesn't mean that kept thinking it was just going to keep on falling or something like that, but I just doubted any rallies. I know a lot of people were looking for some big rallies, and it just has not materialized. It just looked terrible. And we finally got a little bit of a rally, and then turned around and fell apart. And this rally was when the market really took a drubbing, which was when Trump with the canceling the stimulus talks, and equities really sold off. And we couldn't even get past 94.87, for a closing basis. So here we are, week again. We'll take a look at the cable. A little bit firmer, although they challenged that 30.25 area. And we'll move on to Aussie dollar. Just a quick glimpse. That's been under some pressure, that RBA has really opened the door for them to do further action, and that's really weakened it. And we'll just take one quick look at dollar CAD. And not much of any kind of a rally. Had a chance to try and move higher, and we did a poll. Yesterday's bias chart support was 31.57. We got as low as 31.51, and but not doing anything with it as far as the market being able to move higher. We'll take a look at indices. And Irene says, good morning, Irene. And we'll take a look at indices quickly. You can see here we're moving a little bit higher on NASDAQ. Saw a pretty good little move yesterday. Came into that 605, got there rather quickly. We talked about that as a downside target. Moving a little bit higher. Take a look here with the SPOOs. And 30-minute trying to push higher. Key level on 30 minutes going to be right there. 11,767, 739. Another thing we could look at is any type of fibs, good confluence with. 756. 11,756 would be the 38%, and potentially we can move up to here, 768, 767, 268. With that, we'll go on and take a look at the news. Australian dollar bows to the 3-week low as Kiwi looms large. That's what I was referring to. Australian dollar eased to a 3-week low on Tuesday as the country's central bank edged closer to buying longer-dated government debt, in part to put downward pressure on both yields and the local currency. The Aussie dipped to 70.42, below that chart support of 70.54. And happening the way for a test of September's trough at 70.04. The New Zealand dollar also slipped to 65.84, but remained above support at 65.74. The Aussie had already been burdened by global risk aversion when the minutes of the RBA last policy meeting confirmed the board had discussed cutting rates and buying longer-dated debt as a means to support the economy and restrain the currency. The minutes gave a green light to further monetary policy easing by the RBA at its November board meeting. She said that economist Belinda Allen, she and the market expect the cash rate to get to 1/10 from the current 25 basis points. We think the RBA will announce quantitative easing program of at least 100 billion, said Jack Chambers, a rate strategist at ANZ. Purchase would include Commonwealth and state bonds, but not private sector debt, he added. The RBA has no desire or need to buy private sector assets. By lowering the risk-free curve, the RBA would lower all odd rates, said Chambers. Investors reacted by pushing the 3-year bond futures to a record high of 99.84.5. Futures for 10-year bonds firmed for 99.25, near the highest since March, when markets were tipped into the turmoil as economists across the globe began shutting to fight the coronavirus, or I should say economies. And Ariel says, good morning, Ariel. And the euro struggles as the US deal, hopes fade, COVID spreads. The euro struggled to rise above the 118 level on Thursday as fading hopes for the US coronavirus package dealt a blow to risky assets worldwide, with rising coronavirus infections in Europe also weighing on the single currency. Despite the rise we have seen in Europe, the euro has held up relatively well compared to the dollar. Those concerns pushed the euro lower in early trades, with the single currency at 1760 after briefly popped to a one-week high of 1794. As we approach the U.S. elections with COVID infections around the globe rising at a fast pace, investors may refrain from engaging into large trading positions, said Cheryl Lambos Pasoros, senior market analyst at JVFD Group. France reported a massive jump of people hospitalized with COVID-19, and Ireland announced some of Europe's toughest restrictions. Elsewhere, the Australian dollar dropped. We already know about that. Minutes RBA, we already know about that. Sterling held on to small gains made by the previous day at 29.41. Britain's chief Brexit negotiator David Frost said there was no basis to resume trade talks with the European Union unless there was a fundamental change in Brussels' approach to negotiations. So there we have it. And like I said, we've moved a little bit higher. We are above single-day VWAP, but two-day VWAP around 1176. And we talked about 1166 would be the 38%, but the key level we're looking for to get to would be 11, basically right there, which is on a 30-minute 1168, and two-day VWAP would be at 1176. We'll take a look here at gold to see what that's doing. Not a whole lot. Hit that 1925 again, but we did fade from that. And that is about it. With that, we'll go and move into the analysis. So the euro closed higher. Okay, the euro closed higher. I was making sure my notes have been updated. Euro closed higher above the last 3 days. Paring back though from 1787, you can see that. So we did close above the prior 3 days. You can see we challenged the 1787. We did pare back a bit into the close. Key resistance going forward will be 1829 with support at 1707. Breaks on either side will determine direction going forward. So you can look and say 1787 is really the resistance. True for immediate, but where the rubber meets the road is right there at 1829. That's where the rubber meets the road. And on the downside, it's going to be 1707 right there. If we break below that, there. Then either side on either side is going to call the direction. So we shall see. Anything in the middle is just going to be just dancing around. I think we could get back above 1787. We might even make it to 1802, and then we could roll back. So the real resistance is going to come, like I said, at 1829. We get above that, and they're going to hit the stops. So let's go and move into cable. So cable moved higher on Monday, but was kept in check by 3025. You can see that right there. Resistance on Tuesday will be, once again, 3025, with support at 2878. Let's go to the Aussie. So Aussie attempted to poke its head above the 71 cents. See right there. Before fading, before reaching a resistance level of 71.29, the pair looks vulnerable to a move to 70.19 with resistance at 70.95 for Tuesday. Still remains bullish, but actually now we're starting to rotate lower, and we've already broken several days, so we have to change that now to bearish. And let's go move into the Kiwi. The Kiwi posted a similar price action on Monday to its cousin, the Aussie. Support on Tuesday will be 65.54 with resistance at 66.27. And I'll keep that for a range. Onto the dollar CAD. So the dollar CAD defended the 31.50 on Monday, but did not establish upside momentum. Support on Tuesday will be 32.45. I mean, it needs to be resisted. That's going to be 31.45. I meant to put with resistance at 32.45. On to the dollar peso. So the dollar peso supported 2107 level again. The pair is still vulnerable to a sub 21 cent move with support at 2091 and resistance at 2133. So 2091 is still going to hold 2133 just off the tick. Okay, I'm on the phone. Now moving to the dollar yen. So the dollar yen closed Monday with a doji. You can see that right here. Resistance on Tuesday will be 585 with support at 518. So not a whole lot of movement. And the dollar index closed weaker on the day despite the sell-off in equities. Support on Tuesday will be 92.76 with resistance at 91.14. And we're just simply just not moving higher on this thing. So, I mean, you've had all kinds of opportunities for this index to move higher, just simply won't move higher. I mean, I think the overriding theme is because, once again, once we get past the election, we might see a huge stimulus bill, and that's going to weigh on it. It just simply just can't, just need a rally to save its life. Even under the best circumstances, if you want to call it best, if equities are fading, but that's just the way it is right now. Let's go move into the cross rates. So we did make a stab up here towards the 70-cent area. We actually got to 70 cents and then turned around and dropped right back on its face. Similar move that we saw with the Kiwi versus the dollar, although it opens the door for a further dip, but we didn't get that much of a dip. I think there's more about the technicals because, once again, the Kiwi is a little bit better shape than the Aussie, although it's in a range, kind of like on the weaker side. So we had resistance at 70.13. The high was 70 cents. What I'm going to do now is, you see this low bar, go with that for the high, which is 68.78, or excuse me, 69.78. They did test the downside, but we'll go for on the downside. Let's look at the high here, which kind of confluences with that, and with that here. So we're going to go with 69.11. Oh, that's what we had already. Okay, perfect. So in the euro pound, we got that dip lower, and then we try to move higher. And I think we've given it from yesterday some pretty good ranges. because it can move on either side. So I don't expect there to be any changes. We had on the downside 90.15, and they actually got as low as 90.20, so it came pretty close, 90.21. And then on the upside, we had 91.32, and we're at 91.04. I think this is still good, the 91.32. The difference is on the downside. You see the low bar here? That low, that's going to be support now, 90.42. Doesn't mean we're going to necessarily make it that low. I doubt it, but that's where you're going to see some demand come in. And that's essentially your risk if you were to be long. Let's move on to the Euro odd. We know that the Aussie has been in trouble and the odd holding up better overall compared to other currencies. So sure enough, we're seeing this thing move higher. And we were already able to get it past 67.06. So you can see this has been quite the launch recently. We had 91.32. Wait a minute, that's not right. Oh yeah, but the Euro odd. 66.12. We definitely blew right past that. So on the upside, we'll be looking to see we got some volume trading here, 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 all the way coming across there. That will put us at 67.59. See all these touches here. Actually, a little bit stronger. You see right here, here, here. Right there. Let's go there. 67.71. So that'll be the move that it can get to before I think we see a pause, or at least a little bit of a pause. 67.71. It's no longer in a range now. We did finally bust above here. We talked about that yesterday because once we get a move above 65.81 on a closing basis, so it's now turned bullish. And on the downside, let's go to a 2-hour chart. Boy, this thing has really been going. Blowing and going like a marathon runner. 66.53. That would be the risk. Let's go and move into the Euro Kiwi. Good move with the Euro strengthening. See that here. Upside, let's see where the low is on this bar. See that? 79.29. We'll go with that. 79.29, just above it, or it has hit it. 79.29. And we're going to give it the benefit of the doubt and go bullish. And on the downside, see this bar here? Right there. That's a bit rich. We'll just go just a touch lower right there. 78.36. And from there, we'll move on to the Aussie. This does definitely looks vulnerable. We did have our support yesterday for 74.24. We've been as low as 74.20. We'll keep that for today. It was 4 pips lower, but we'll keep that. Market's really been in a down swoon. On the upside, 75.23. That would be the risk, 74.92 now. Don't think it'll get there, but that'll be the resistance. Take a look at the guppy. Well, we definitely made a move a little bit higher here, a little bit more of a strength. You see this bar right there? That low kind of confluences with this body, and that's going to be a resistance, which is going to be, we're almost there, 36.77. And downside support 35.89. And lastly, starting odd. Still moving well. There's our resistance, 84.03. And on the downside, the high right there, 82.90. Don't think we're going to get there, but you know what your risk is looking out. And that's going to do it for the bias chart. Looking at the equities pre-market or aftermarket, however you want to look at it, you can see here we did get the get Apple to kind of move a little bit higher. We did break some support yesterday. Amazon doing just a hair bit better in after hours. Gap up here on Google. NVIDIA at 546 is just like a little notch here. Facebook at the underbelly of this trend line. Tesla is still relatively weak. And lastly, Netflix. We'll take one quick look. And I really don't expect a whole lot. Really, I think the key is going to be this 2-day VWAP. Because if you look here, you see all this right here. See, that's a lot of value right there. If you were to look on a market profile chart, and I don't really use market profile.
Hello, good morning to you. I'm Ada Sweeney's mum. She's in Miss Berner's class, year 5. Hello. I've just been trying to sort out the good teacher evening. Here, so if you look I can't fill in that form. I don't have the I don't have Word on my laptop, and my phone is an Android, and it doesn't allow me to fill in the boxes. I can't edit anything on those boxes, and I've just spent the last half hour trying to find download that I can use, and I can't do it. So how can I go about booking? I'm not very tech-minded, and I've just uploaded a free Word document that still don't work. So there's no way, unless I go post
mentioned 11,756 is at 38%.
Do something on my laptop. I work from home, but I don't use Office and all that sort of stuff on my laptop.
You're building right here, right? That's a lot of good work here.
So I can't physically.
I'm looking at it technically, like
I can't fill in the boxes. I can't fill in how to fill in the boxes.
So where are they going to go and push to?
I'm not thinking of it. Because I work from home anyway, so
make it appear to the 2-day VWAP.
Lovely, thank you very much.
This is if you're looking on a market profile chart, that's what you're going to see. It's going to be like this, and then like that. So this is where potentially the market can get to, which would be right there, potentially 791. But that's what we have for today. Thanks for joining. Thanks for joining us here on the European Crossover webinar. And we shall see you in the chat room.